When it comes to oil and gas, everything is a bit complicated. So the Biden administration is playing a game caught in a vice, really, between its environmental commitments and its desire for cheap and abundant gasoline. And of course, those two objectives are incongruent with each other. You can't have one and the other at the same time. And as our friend Luke Roman likes to say, they're trying to ride, two horses with one ass. And so what you see is at the same time that the Biden administration is canceling leases in Alaska, it is attempting to restart oil exports from Venezuela and working to cut a deal with Iran because they do recognize that the price of gasoline is going to be a significant input into the 2024 election and the psychology of the voters. And so he's mindful of not letting things get out of hand. But at the same time, his political base is composed of people who would be violently opposed to drilling and fossil fuel production in general. And this is, again, sort of trying to put a square peg in a round hole.
Think. Act. And prosper. You are now tuned into the Money Level Show.
Hey everyone, welcome back to the Money Level Show, where we think, act, and prosper. This channel focuses on changing financial trajectories and building legacies, so I hope that you all enjoy the content today. I am your host, Daryl Thomas, and today we're going to be talking with Doomberg. Now, Doomberg is a green chicken that focuses on finance, economics, and politics. So behind the green chicken are former engineers that worked in the commodity sector that know their stuff. So today we're going to talk to Doomberg about commodities, and we're going to talk to Doomberg about politics and how is that going to affect this commodities bull market. So before we get into the interview, please look at this statistic here. It shows that over the lifetime of my channel, 91% of people that watch my content are not subscribed. This number is disheartening. So please be sure to hit the like button, hit the subscribe button. Don't be that guy or gal that consumes the free content and doesn't support the channel. All right. So without further ado, let's get to the interview. Hey, Doom, how's it going at the Coop?
Daryl, great to be back. It's been too long. Everything's going great over here, and congratulations to you on all your success as well.
That's good. Thank you so much. I imagine you got to be aware of the wolves and the raccoons and all types of things at the Coop, right?
Yeah, the chicken feed is flowing in good. We're eating well over here in the Coop. Like must be said, we're having a good run. Our partners at Substack have a lot of momentum and riding that wave with other Substack writers and doing our best to be as good a podcast guest as we can with other creators like yourselves. And it's really a blessing, to be honest with you, to be able to find what it is that we were meant to be doing in life and to have the freedom and the ability to just keep doing it is really special. We're going to ride this wave as long as the good Lord allows it to be in front of us, and really just been an amazing journey for us.
Amen to that. Amen to that. So today I wanted to jump into a few different topics. We have oil at its low since I think 1985, and to my knowledge, when I look at the world population charts, they've increased significantly since that time frame, and we consume more energy since that time frame. So what does this mean for crude and like diesel and all these different things that are affected by the supply of oil?
Yeah, so I think you're referring to inventories of physical oil that we have, and the overall production that feeds that. That sort of supply-demand balance. Things are pretty tight in the physical market. Pretty tight right now. We wrote a piece recently about how Saudi Arabia is going to be setting the price of oil because of that market tightness. And historically, when markets are a little tight like this, OPEC gets market power, and they tend to want a high price of oil, not too high, of course, because they recognize that if the price of oil gets out of hand, that then rebounds into economic weakness and recessions, and then that, of course, crimps the demand for oil, which sort of makes it circular. Right now, the market is tight. Inventories are low. Refining capacities, which are the real bottleneck here, the ability to take that oil and convert it into gasoline, jet fuel, and diesel, and so on. Refining capacity is a little bit tight. We just wrote a piece called Molecular Tourism, where we tried to explain to our political class why it is that oil moves around the world in the way that it does. It's a complex market. Oil price here is sort of off the recent highs, but in that $90 a barrel range, depending on which crude grade you're looking at. That's kind of the sweet spot for Saudi Arabia and OPEC. And actually, to be honest with you, for the Biden administration, if we could keep oil in this $80 to $90 range, I think everybody would be happy. Below that, the Saudis and OPEC start to cut. And above that, of course, we have economic weakness. So we'll see. If you pushed us, we would say that the outlook is a little bit bullish for oil to a point.
Mm-hmm. Yeah, I was looking at it seems like our, policies and such aren't really helpful. Biden stopped, I think it was some drilling in Alaska recently. I think he allowed ConocoPhillips to continue. And I don't know the political relationships there. I'm like, okay, that seems like a little bit like favoritism or whatnot. But I haven't dug into the ins and outs of that. We see the oil rig count continue to trend down. I think we're down. I think the last time I was looking, it was at 620, and now we're at close to 520. A friend of mine who works in the oil industry mentions that people in that industry are fearful of if their jobs are going to get cut and such, and they've had to decommission some more rigs and things of that nature. It seems like that adds more to the issue of supply, right? Hello, everyone. Sorry for the break in action, but I want to tell you about the link in my description below. This is to the New Orleans Investment Conference. This conference has been around for years and have brought many people out, such as Milton Friedman, Gerald Ford, Alan Greenspan, and Margaret Thatcher. This conference is put on by Brian Lundeen and his team. Brian is the CEO of Gold Newsletter. This year, they're going to have speakers such as Jim Rickards, George Gammon, Peter Schiff, Rick Rule, Danielle DiMartino Booth, Lynn Alden, and many others. Now, I encourage you to click the link in the description below. You can choose to attend the live event, which I will likely be at, as well as the event that is live streamed. You can support the channel by using my link below, so I encourage you to check that out. Now, let's get back to the interview.
It's again, when it comes to oil and gas, everything is a bit complicated. So the Biden administration is playing a game caught in a vice, really, between its environmental commitments and its desire for cheap and abundant gasoline. And of course, those two objectives are incongruent with each other. You can't have one and the other at the same time. And as our friend Luke Roman likes to say, they're trying to ride, two horses with one ass, And so what you see is at the same time that the Biden administration is canceling leases in Alaska, it is attempting to restart oil exports from Venezuela and working to cut a deal with Iran, because they do recognize that the price of gasoline is going to be a significant input into the 2024 election and the psychology of the voters. And so he's mindful of not letting things get out of hand. But at the same time, his political base is composed of people who would be violently opposed to drilling and fossil fuel production in general. And this is, again, sort of trying to put a square peg in a round hole. And Biden, to his credit, I guess, cynically, has done a decent job, raiding the Strategic Petroleum Reserve, flooding the market with oil, working to try to get Venezuelan crude back online and so on. In so doing, he has effectively put a cap on the price of oil for the past 12 to 15 months. It certainly worked for the midterm election in November, but it remains to be seen whether these tactics will continue to work through the next election, which is the true objective here. So it seems contradictory to the outsider, but once you realize that Biden is trying to placate sort of environmental leftists in his political coalition, while at the same time trying to manage down the price of gasoline at the pump that American consumers pay, it makes a bit more sense. Yeah,
that makes total sense. Why that would be in his interest to try to keep the price down, but also appease his environmentalist buddies. So could you explain a little more about the importance of oil. I mean, there's a lot of people, like I've been getting into conversations with friends of mine since I've been more diligent in just my research and such, and explaining the importance of oil and such. And many people are still clueless of, like, how this energy, how these resources work within our world and their everyday life and their everyday luxuries. And so could you explain, like, just what would happen, if we don't have as much production? Obviously the price would be high, but many people want to get rid of the resource, and the resource should be apolitical, right? It shouldn't be a political resource, but it is. So could you just share more of just like why people should be more educated on, like, what the role that oil plays in our world?
Oil is the master resource in our economy, and it's deeply naive to believe that we can meaningfully decrease our consumption of it without massive economic upheaval that few would be willing to subject themselves to. So oil, in fact, is a gemisch of molecules that is fed into refiners, and at the refinery, oil is converted into gasoline for our cars, diesel for our long-haul trucking, jet fuel for our airline industry, which is not just moving passengers on vacation or business people to and from various cities, but also involves the shipping of cargo via air freight. Our just-in-time delivery economy, one button buy on Amazon and stuff shows up at your house, sometimes even the same day. All that is facilitated by the products that come from a barrel of oil. Additionally, oil is the feedstock that provides the carbon that feeds the chemical industry, which basically provides all of the materials that we enjoy in our day-to-day life. The hat you're wearing, the shirt you're wearing, the mic you're talking into, the chair you're sitting on, the carpet beneath your chair, all of those things started at a barrel of oil molecularly. And so at the refinery, we make gasoline, diesel, jet fuel, petrochemical inputs, asphalt. Our roads are paved with oil. All of these things have their own supply-demand dynamic and are sort of elements of our standard of living that we've all become accustomed to. And while the focus of everybody's attention is on, hey, why don't we just build windmills and solar panels and drive electric vehicles, that doesn't solve the, quote, hard to abate uses of oil, like diesel for long-haul trucking and aviation, jet fuel for aviation. Let's just focus on diesel in particular, because that's one that people tend to minimize. Every single product on the shelf that you eat, consume, enjoy was brought to where you bought it via a truck or a train or a ship that is powered by diesel, basically. And so if you want to look at inflation correlations, just look at the price of diesel. If diesel is expensive, inflation is high. If diesel is cheap, inflation abates. There's literally nothing about our modern economy that can run without diesel. And so, one of the giant lies of the environmental movement is that we can somehow elect to not use fossil fuels while simultaneously enjoying our current lifestyle. Our view is there are no solutions, only trade-offs, and we need to make the nature of those trade-offs apparent to society, to your friends who are only perhaps superficially following the news and have been fooled by the algorithms into thinking that somehow this is all a choice on our part and that there's an easy way out of this dilemma. There isn't an easy way out of this dilemma, and we should put those hard choices to the people in a more honest and forthright way so that we can make informed decisions about which trade-offs we're willing to ponder. So yeah, oil is really, and by the way, for the 5 to 6 billion people outside of the Western world who have very limited access to energy, they don't really care about carbon emissions. They will happily consume anything that we forego because they're living a life that we would be unfamiliar with and certainly wouldn't accept. And oil is the gateway out of that poverty and into a middle-class living.
Wow. Yeah, that's that's wow. It was interesting because when you mentioned that, because I was watching a speech from the Rural Symposium of Robert Friedland, and he was talking about how, like, people think that Google searching is is clean energy or carbon emission free, and then he goes into like the servers and all these different things that are powered by energy that are powered by carbons and things of that nature. And so like even when people are going to search something on Google, like it's like using fossil fuels most likely.
Daryl, consider ChatGPT, right? All the rage, the computing power behind AI is enormous. And if you go to these server farms, these warehouses filled with computers, what do you think is keeping them cool? Never mind powering the servers themselves, which are huge hogs of electricity consumption. But you have to air condition those. These things get hot. Like anybody who's operated a PC knows that there's a fan in it. High-end PCs aggregated together into buildings. They need to be proactively cooled. Those air conditioning units need to have electricity to power them. In fact, the explosion in AI and the proliferation thereof is driving huge demand for energy. And I think we're going to see in the near term a reconciliation with physics where the computing sector, the Microsofts, the Googles, the NVIDIAs of the world are going to start to realize that they actually need nuclear power as their friend. And I think we're going to see a proliferation of micro nuclear reactors to power these warehouses to offset the carbon emissions that will necessarily follow if we continue down the same path. Everything in life is energy. Energy is life. Your standard of living is defined by how much energy you, Daryl, get to waste, period. Right angles do not spontaneously appear in nature. Your home, your apartment, your car, your groceries, your clothing, your entertainment, your video games online, all of these things are powered eventually by energy somewhere. And this giant lie that we can somehow maintain this standard of living, which frankly, I think is sort of deeply anti-human to tell this lie, that we can maintain this standard of living without consuming energy is a fallacy. And again, the sooner we can get serious about discussing these hard trade-offs, the better. So for example, people are deeply anti-nuclear. The same environmentalists who would like to stop us from using oil are just as violently opposed to nuclear power. Well, okay, then what's the answer? Because we can't do it with wind and solar. It's too intermittent, it's too expensive. And by the way, resource hogs, like whereas all of the metals and materials that are needed to make wind and solar work going to come from, they're going to come from mines that are powered by giant diesel trucks. And so nuclear is, of course, the answer, as we've talked about on virtually every appearance I've had on your show. And I think we're going to see that the AI data-driven Google search that you refer to, they're going to be leaning on nuclear going forward because it's really the only solution that works for them.
Mm-hmm. Yeah, definitely. And just before we transition to nuclear, I wanted to see if you had a take on offshore drilling. I've been kind of doing a little bit of research in that aspect of drilling for oil. Is there anything occurring within that market? I know the stocks are down way down, but I was kind of wondering if you had any take on offshore drilling. Hey everyone, sorry for the break in action, but I have to let you know that I am now an affiliate with Miles Franklin. Miles Franklin has been a bullion dealer for over 30 years, and they provide some of the highest quality service to their clients, as well as fair pricing on bullion products. So purchasing bullion through Miles Franklin not only stores wealth for yourself, but you're also supporting this channel to continue to provide free educational material for retail investors and those who may not be aware of many financial concepts that I discuss on this channel. So you can get started by sending an email to info@milesfranklin.com or calling 952-929-7006. Be sure to let them know that Daryl Thomas or the Money Level Show sent you, and I will receive credit for your service. I thank you all for considering this. Now let's get back to the interview.
I think offshore drilling is a technical miracle, and the scientists and engineers and workers who make that miracle happen should be applauded. I think we are going to need oil. We're going to need diesel, jet fuel, gasoline, and petrochemicals for as far as the eye can see. And to the extent that offshore drilling provides incremental supply, as perhaps drillers in the shale patch take a step back a bit because of costs and a desire to generate some cash flow for their shareholders. I think offshore drilling is going to be a necessary cog in our energy wheel for decades to come. And of course, they are priced cheap today because environmentalists have put pressure on money managers and various Wall Street investors to defund the oil and gas industry. And one of our beliefs is that these companies really shouldn't be public anymore. They should be privately managed and returning cash to their shareholders accordingly. Stuck in the public markets, they're getting no love, of course, and their stocks are really well below what the company's cash flow would indicate that they're worth. But this is the same for coal, and it's the same for natural gas companies as well. And so, unless we fix the valuations that Wall Street is willing to apply to these companies, they're going to have to go private because it doesn't make any sense for them to raise capital at these valuation levels.
Hey, everyone. Sorry for the break in action, but tomorrow we will have part 2 of this interview that will be uploaded. I hope that you all enjoyed part 1. Be sure to hit the subscribe button. As you can see, 91% of the people that viewed my channel over the lifetime are not subscribed. So be sure to hit the subscribe button, show your support. It only takes the click of a button. And I want to thank you all for joining today. So be sure to be on the lookout for part 2 of the interview that will be uploaded in the next day. Thank you.